We are live.
Is Christina or Albert available?
I don't know, here comes Christina now.
Are you coming on? Are you coming on the meeting, Sheila?
We are live.
Is Christina or Albert available? Investment. We're trying to get a quorum. That's, oh, okay. All right, so you can't make it? Okay. All right, okay, thank you. I sent you the stuff.
I'm here.
Bye.
All right,
Hey,
we
Christina.
are live and we have 6 trustees.
Great. I'd like to call the investment meeting today to order. What is it? March 21st, 2024. Can I get a roll call, Sue?
Angela Banks. Christina Bennett.
Present.
Lois Cross.
Present.
Sheila Goodwin. Emily Hubbard.
Present.
Shanice Johnson.
Sanders is in waiting room.
Shanice, are you there?
Present. Yes, I am present.
Thank you. Yvette Levy.
Hey,
Martell Mann.
Present.
Bobby Richardson. Albert Sanders. Doris Walker.
Present.
And Albert Sanders.
He's lurking at us, but he hasn't said a word.
I don't know if he can hear us or not. So we do have 6 and 7 with Albert when he's joined.
Thank you, everyone, for attending. Can we now turn it over to Sue or to Gwilda and Jeff to continue the agenda?
Great, thanks, Christina. So Ben Baldridge with our research group is here. Gwilda was not able to make it today, and our first item that we have is a private debt search that Ben is going to go through, and I believe we wanted to take this into closed session just because of the nature of the search.
Okay, I will put up a motion.
As Sue presents the reading, can someone make the motion, please?
I can read it.
I
yeah.
make a motion to close the meeting and that all records and votes to the extent permitted by law pertaining to and or resulting from this closed meeting be closed under RSMO 610-02112 for the purpose of having a confidential or privileged communication on contract matters.
Great. Is there a second?
I second.
Sue, we need a roll call.
Yes. Christina Bennett.
Yes.
Lois Cross.
Yes.
Emily Hubbard.
Yes.
Shanice Johnson.
Yes.
Martell Mann.
Yes.
Albert Sanders.
Yes.
Doris Walker.
Yes.
All right, so we do have 7.
Thank you. Now can we stop recording?
Yeah, let me do a couple of things. It's thinking about it. All right. We are live again.
What you eating, Lois?
I took some medicine and I had to take, I had to eat something. Oh,
Mhm.
what do
Get
you call
a little snack.
it? Ritz crackers, yeah.
Okay. Well, good. Are we good to move forward?
Yeah, you're live. Yeah.
Okay, so at the risk of muddying things up here, since I know one of the items we had on for the next meeting was to have Lomax in, and so we probably have to rethink that now for bringing managers in. But tied in with that, we had a search to talk about today, which I think we probably just need to table because I don't think we have enough time to cover it. And I think in the grand scheme of things, relative to this other decision, it's
What happened?
going to be a little bit lower. Want to spend like 2 seconds on one page just to give everybody some food for thought on, maybe we do want to consider a little bit of a reallocation upcoming. So
Oh,
All right. So Jeff, you want to pick this section up?
yeah, so it's going to be page.
Can we mute someone? Can we mute someone
But
soon?
every time I play rings, it's like it goes to 5 to 4, and then it's like
Thanks.
So Sue, it's PDF page 14.
Okay.
So anyway, this is a full large cap value search. I'd like to at some point to have a little bit more time to go through all of these, but at the very least, I wanted to make sure everybody had a chance to just take a look at a performance comparative. So this is Edgar Lomax, the system's current value manager, is down at the bottom. You see their benchmark right below. We know they've been having a bit of a challenging period. You can see that 1-year number there at just shy of 6% relative to the index. And you can see where the other managers that we have on our approved list have done pretty well for that 1-year period. But again, we don't like to pay too much attention to those short-term periods. You start to bring it out a little bit further, you go to a 5-year period. Again, you see the index is at almost 11%. Edgar's a bit behind that, but then you see the other managers. You have some pretty strong looking managers in that group. So between Sizer, Newton, Dodge, and Cox, and Aristotle, we have this in the search. Probably not someone that we would think about going forward with because they tend to be a little bit more core. So the ones that we would sort of think about would be Sizer, Newton, and Dodge and Cox. But in any event, I don't want to spend a ton of time today, but I just did want to give everybody some food for thought that we do have a single manager in value. They've had their challenges. They certainly will come back, but other areas of the equity market, we do have multiple managers sort of diversifying out, and we think this is just another area where we could get another manager in there. So again, we don't have to spend. I want to make sure we have enough time to talk about rebalancing today and at least get a quick update on performance. But did want to share this with everybody, and we'll kind of figure out around this private debt how we can get a better conversation in with this, how we can also find some time to have a conversation with Lomax. And then again, we'll sort of put it to if we expand this out and we say, hey, we think Sizer's good, we think Newton's good. If the committee wants to also think about having a day out in the future for interviews for those other managers as well. So a lot of food for thought, but just wanted to make sure we at least had 2 minutes to talk about it today.
Okay.
And with that, Sue, why don't we jump over to the rebalancing?
Okay.
Okay, so this is all part of the annual process. We did this about a year ago where Sue and her team come up with estimates for what we will need for the rest of the year for benefit payments and expenses. And Sue, if you want to scroll down a little bit just so we can sort of see that bottom line number. But again, a lot of numbers on this chart, but how to read it all the way to the left, those are as of the end of February, those are the current asset values for all of the managers in the system. And in the middle section, that's what we're calling a rebalance, but this is where we're getting the cash from. And you see where it says total system right in the middle at $60 million. So that's the number that Sue gave us. Now, again, and we have this outlined at the bottom of the page that we're not taking $60 million out of the system all at once. This happens throughout the year as Sue needs it for benefit payments and expenses, and we sort of take it from each of these managers as necessary and then as outlined. So Sue, kind of scroll back up to the top if you can, and we'll just go down the line. But just to tell you by design of where do all these negative numbers come from the different managers, that really we're doing this in a manner to keep the allocations that you see to the right and those percentages as close or in check to possible to the policy, which is our target, and that's all the way to the right. So that's really where these balances come from. So managers that were more overweight relative to policy, you'll see a bit more money coming out. Managers that are sit pretty close to their targets today, we're not recommending taking any money from. So unless things drastically change over the next couple of quarters. So, but again, this is money that's sort of taken out as needed for most of the managers that we're recommending here. They're all fairly liquid. So the domestic equity managers are pretty liquid. That's money that if we give them, let's say, a week's notice, it probably could be even shorter, that we can get that kind of money from them. So the only ones that are a little bit of a caveat, Sue, if you scroll down to the bottom again, sorry to have you flipping around so much here.
That's all right.
Are the two that we have an alternative. So we have 2 million from Grosvenor and then 4 from White Box. So again, those are hedge funds. Their structures are a little bit different. We have to give them notification. I'm not positive which one is which. I think one of them has a 60, one of them has a 90-day notification, and the money can only come out quarterly. So those take a little bit more managing. So those are probably, Sue, we'd probably slate those probably towards later in the year for when you need money, but we'd want to think about getting redemptions in front of them, fairly soon. But those are the only ones where we really have major liquidity to manage. Otherwise, the rest of the managers, we should be able to get it in fairly short order. So again, end of the day, twofold design here. Number one is just to get money that we need to carry out what the plan does, pay benefit payments and expenses, and then doing that in a manner that keeps our total portfolio allocations in check with the legal investment policy statement. Any questions on proposed rebalancing? And Sue, I would think we would need a motion on this, correct?
Yeah. I have one. If there are no questions, I can switch to that whenever we're ready.
I have no questions.
So that's for motion there.
I move to recommend the rebalancing plan per the proposed target asset allocation as presented by investment consultant ANCA.
Second.
It's been properly moved in second. Any questions? Roll call, please, Sue.
Christina Bennett,
Yes.
Louis Cross,
Yes.
Emily Hubbard,
Yes.
Shanice Johnson,
Yes.
Martell Mann,
Yes.
Albert Sanders,
Yes.
Doris Walker.
Yes.
All right, we have 7, motion carries. Thank you all.
What's next on the agenda, Sue?
Jeff, did you want to look at the February report?
Apologies, I was on mute. Yep, I was saying, let's go ahead and pull up the February report.
Okay.
I'm thinking you got lucky, Jeff. Do you have positives here that Quelda's not reporting?
You know, I don't know if it's lucky or if just Gwelda doesn't like to give the good news. I think she just likes to hand it over to me, but she's just that nice of a person. She's that good of a person. She gives that to me. So so you want to flip forward just to the first page on this? We can. What's that?
I said Bobby's not on here to really grill you now.
Yeah. So Sue, can you make that a tad bit bigger? Perfect. So as everybody can see, focusing on that top left chart, those are our major asset classes. And you can see it was a really good month across the board on equities. So the S&P 500, that's all those large cap stocks that we all know about, the Microsofts and Coca-Colas and Apples and things like that. Really strong month. And if you drill down to other areas, the small caps, that's the Russell 2000 index. Those are the ones that can be a little bit more volatile, but those were a tad bit better than the large caps for the month. And the non-US stocks, those are the 2 segments below that. The EFA, those are developed markets. So think of Japan and the UK and some of those markets. More developed, almost 2%, so lagging the U.S., but still a good trajectory that we've had from outside of the U.S. And then the emerging markets at almost 5%, so they've been charging back a little bit more too. So remember, those have been lagging for quite a bit. The fixed income markets are the next section below that, and the U.S. aggregate, that's the first line there. At a negative almost 1.5%. So we just saw another month where we had this pressure on fixed income. And it's not so much from the Fed continuing to raise rates, because they haven't. They've stopped, but the market had this impression that the Fed was going to start lowering rates fairly soon, and they thought they were going to do it probably 6 times before the end of the year. And when the Fed came out and said, well, no, that's not going to happen, we're probably going to have rates be higher for a bit longer, and we probably are only going to have 3 rate cuts, the market and fixed income in particular didn't react very favorably to that. So we saw that negative. Fast forward to the past couple of days where the Fed has come out again and said, we're not raising rates, but we are still sticking to our story that we might lower rates later in the year, maybe 3 times. Market was really positive on that. So equity markets today, this is in March through today, are up over 2.5%. And the fixed income markets are still hovering around flat, so they're just not reacting as favorably. But from a total portfolio standpoint, because we have the weighting that we do in equities and how we are diversified in fixed income and other areas of the market, the returns have been pretty good. So Sue, if you want to flip forward and we can take a look at actual system performance for February. Oh, sorry. These are the asset allocations, and I did mention before we would talk a little bit about this. So again, how we read these for each segment, the upside down triangle in each asset class, that's your actual allocations at the end of February. The line that goes up and down within those gray boxes, that's the target allocation, and then the gray box, that's an actual allowable range. So always want to be within the allowable range, which across all asset classes we are, and then trying to be close to those lines as possible to keep us in check is ideal. Again, that rebalancing that we just showed you was really designed for where we have large cap equity a bit overweight. Let's bring that back to the line. The other areas that are overweight, let's kind of bring those back to the line. And conversely, if we don't take money from certain places like global multi-sector and fixed income or tips or core fixed income, then we'll kind of organically rebalance those back upwards towards their target. So again, just trying to give a little perspective on how that rebalancing we just showed you works. And then tying into the conversation with Ben on private debt. So you see we're still within the allowable range for private debt, but we are below the target. And so that's what our pacing is designed to do, is to have a methodical process for getting us closer to that target. And again, going through this process of let's take a look at a few managers, let's have them in and give us their show and tell us why they should be part of the system and let you all kick the tires. And then ultimately making a recommendation, a commitment moves us closer to that target. So you want to flip forward one more page? I know we're running over here, so just want to make sure we hit performance really quick. So with all of the good stuff going on in the markets for the month of February, we were almost at a 2% return for the total fund. Again, not a surprise from what we looked at in that market overview. A lot of that return really coming from the equity portion. In particular, the large cap managers had a really good run. So bumps up the fiscal year to date number a bit. So about 1.85%. And then you can see where the latest 12 months are at about 10.5%. And then as we go on further in time, a 6.8% return on the 5-year, and then 6% on the 10-year, and then an inception number just shy of 7%. So again, still sort of battling that number from 2022, which was not great. And again, some pieces of the portfolio like Lomax that have had a bit more of a underperformance. Those are things that, number one, we certainly want to see Lomax get a better environment, which we think once interest rates start coming down, that bodes for their type of wise. Other areas of the market looking, Sue, if you want to flip forward one page, that's sort of been the other segment of this total system portfolio that's been a little bit off relative to the benchmark. So are they on this page? I think they're one more page forward. Sue, I'm sorry. There we go. So again, a better month for them. So not far off the benchmark. So close to that 4% number on a fiscal year basis now, pretty much in line with the benchmark. The latest 12 months still a bit of a gap to backfill for some of that underperformance they had. But again, we like to continue to see them moving in the right direction. And again, that's between that portfolio and Lomax for the past 12 months are probably our biggest explainers for that relative performance differential. But again, very strong nominal numbers across the board. What we like to see, and certainly as we get more of these good months and quarters and periods, that starts to tack on to these longer term numbers, because again, we have this overall 7% return assumption that we want to make sure we're matching and exceeding over longer time periods. So with that, the only things we're really paying attention to right now, it's number one, making sure we can continue to fund up on that alternative space, diversifying out that large cap value exposure. So something that we do want to address in the coming meetings, and otherwise a lot of good things going on in the portfolio right now. Questions? I apologize that we ran a little long. I just wanted to make sure we gave Ben enough time to go through his report, and hopefully everybody got a good flavor for where we're starting with those managers.
No, I think it was a good overview. I appreciate it. Good report. Anything else on the agenda? Any
Great, that's
questions?
it. The only other thing I will bring up, I know we didn't have it on the agenda, but UBS, if you recall, that's one of the managers that we have that's a real estate manager. We're in for a full redemption, or sorry, we're in for a partial redemption. The other portion of it went into an incentive program, which is giving us a lower fee. They have come back to us with another program that's basically designed to get investors to rescind some of their redemption. We're evaluating that right now. We had a conversation with the manager. We have to dig in a little deeper, but there is a potential that maybe there is a benefit to changing the redemption that we have. Again, we're trying to figure out liquidity on their end when they expect to be giving money back. I think long story short on that is just given where the real estate market is right now, we're not expecting money back from UBS anytime soon. So if we can evaluate it and find if there's a way that we can at least save some money on fees, we'll look to do that. But still trying to detangle that. But I think over the next meeting, we'll probably have a little bit more detail and can come back with a recommendation on that.
Okay.
That's all I have. That's all I have today.
Yep. And when you come back, Jeff, can you give us a refresher on the type of real estate they're invested in? Because again, we haven't touched them in a long time. We haven't looked at them. So I just wanted to follow up.
Right. We can certainly readdress that.
Thank you.
Great.
I know
Other questions, comments?
I know you hear my blinker. I'm being safe.
Hands free.
Oh, I'm totally hands free. Is there anything else on the agenda, Sue?
If it's not,
Great. I'm gonna leave the honors to
I make a motion to end our meeting today. March 21st, our investment committee meeting today, March 21st at 6:07 p.m.
Is there a second?
I second that.
All those in favor, please say aye.
Aye.
Thanks, Albert.
You're welcome. Have a good.
Hey,
I got 4 more days of spring break.
Thank you.
Oh,
Thank you
well,
all.
have
Enjoy
fun, Albert.
spring break.
Okay, take
okay,
care.
see you all
right.
next time.
Bye-bye.
I see y'all later.
Don't forget those papers.
Oh, I'll get them.
Okay, bye-bye.